My question is two-pronged. And this one, I want you to, in very layman terms, dumb it down so that the 20-year-old will be able to understand. And I joined VUCA about 2 years ago. Agatha, I stand correct. I think about 2 years ago. And I'm not casting a stone or anything, but it was the 9.4% kind of assurance of interest, I think, on dividends or something like that. But when you look at it, and I know for sure that this is a long-term investment, like you keep insisting, but on the short term of that 2 and a couple of months, years, like for this year, for example, has been quite low. Could you maybe dumb it down for us to understand some of the challenges that cause that volatility for moving from that expected probably 9.4% to probably 5.6 exactly? And this is a conversation we had. That's why Agatha is actually joining in. Make us understand, we expect this probably in another coming year or so, and for us to be comfortable to say, okay, let's keep on, let's hold on, let's keep on topping up our dividends. Yeah, and the second one, I said it's a two-pronged. The second one is looking outward into markets abroad. The REITs in the US, I joined through proxy some groups that are looking at investing international markets, the REITs in the US, etc. And they're saying, especially now when the markets are looking so bad, the economy is just doing so poorly, it's the best time to keep buying those things. What's your take on that? Yes, we're going to have VUCA, no questions asked. But if we want to invest in these other things, what's your take on that? For example, REITs in the US or financial assets like we were talking about.
So, I can't now remember when we launched VUCA, but I know we launched the REITs in 2021. So they've been around for 3 years. So what is if you take they launched at 20 bob. That's the launch price. And then so 3 years at 10%, what should you have made cumulatively? If you take just 1.1 to the power of 3 should give you the number. I don't have it off the top of my head. Should give you the total return you should have made from the dividends and the capital appreciation. So basically, we can try it. It's not too difficult. If it was 20 shillings, like 2021, 2022, you do 10% of 20 shillings, you get 22 shillings, then you do 10%, you get 24 shillings, so maybe 26 shillings. So today, the way you should look at VUCA is the price of the unit, I don't know what it is right now, plus all the dividends that have been paid since. That's how you should add it up. And you find, of course, VUCA didn't start in 2021. I think we launched it in 2022. But that's how, the same way the pension fund is looking at it. So they have gotten appreciation of, you said it's 22. I don't, so 22 shillings on appreciation, and they should have gotten about 3 shillings in dividends, 3 to 4 shillings. That's how your 10% is created. And that's it, because it's the return on your dividend, the cash you get back, and the capital appreciation combined. The yield alone can never be 9% and will never be. Those you will find 9 to 13%, those are money market. But in money market, there is no capital appreciation. And that's why we say that's on average the return you should expect. But so you'll put some money in your money market, some money in VUCA, maybe some money in your SACCO, like that. That's how you should think about it. But it will not. And that's why I gave you that example of you remember my 1 million and the great-grandfather. Because this thing is just a matter of giving it time. But that's the challenge here. We don't see that time that it takes. It's just kidogo hujaza kibaba. And we are not saying that we're not doing, that's why I said with financial assets, you diversify. Don't be only in one. Because also today, those, in fact, 10 years ago, 12 years ago, those money markets were at 6%. They've just come back up in the last few years, and they're going to go down again. So but it's In Kenya, if you get investments that are giving you 10 to 12% over a 10-year horizon, you're doing okay. You're doing fine. You're just fine. There's no need to go chase those high yield things that are extremely high risk. You end up wiping out the return plus your capital, like so many people have ended up doing. Yeah, I don't know if so. That's the way to look at it. And for me, that's what I encourage people to look at, because it's a long-term game. It's the longer the better. It's kidogo kidogo, because where our inflation is. So if you have an investment in Kenya that's giving you 5-6% total return, you're just basically clearing inflation. So you're not building anything above. Remember I told you about the US guys, how they buy homes, that they have a yield of 4% on their house, they are paying a loan of 2%. What they are making is 2%, but over the 30 years of ownership, the equity they create in their home is very substantial. But they're just making a differential of 2-3%. Yeah.
She had another question about investing.
Yeah. And offshore investments are also not a bad thing. But again, for individuals, better go with aggregators like Mansa. You've heard of Mansa? That's an aggregate, rather than going yourself individually, because your quantum is too small. The costs of managing the transactions and all of that, it doesn't make sense. And then you have a day job selling land. So you'd rather sell your land and let the Mansa do your offshore investments, for example. Mansa, by the way, is another financial instrument that gives you exposure to international investment options. And that's what I was saying. So if you go out there, you will find most individuals, they go through an aggregator. They don't go directly. Even BlackRock is an aggregator. Even Fidelity is an aggregator. Even Vanguard, they're just aggregators of retail investor capital. So that US retail investor in Manhattan does not have to come and buy the shares here. He can just buy a Fidelity unit, emerging markets unit, and it is investing here.